Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this weekday Motor Trade Radio podcast interview. Today we're delighted to welcome back friend of the pod, Steve Young, Managing Director of ICDP, the International Automotive Retailing Consultancy, and Managing Director of Auto West London, the all-new Omoda and Jaecoo site, which opened for business in March. Now, the last time we spoke to Steve back in February, he was preparing for the opening. So we'll be finding out how that went and chatting about his new experiences as a retailer. And in the second half, we'll get his take as an industry analyst on what's impacting automotive retailing at the moment. So welcome back to the pod, Steve. Great to have you back with us. These must be interesting times for you.
Yeah, I mean, it's, firstly, good to be back with you both and with the audience. It's been, very busy, but very interesting and ultimately, very sort of rewarding. We had an ambitious plan to get up and running in 10 weeks from basically nothing. And we didn't quite make that, but you've got to set a target somewhere. So
Yes.
we started trading, mid-March. We've not had any issues with customer demand, customer interest. A lot of which, given we've got no database, etc., then you never can be confident about that. But we've had plenty of interest, plenty of orders. We're sitting on a solid order bank. We just need cars, and I think the outlook probably is we'll outperform the plan for year one.
I mean, that was going to be, fantastic to have you back on. That was going to be sort of the opening question around, how the start went with Auto West London and how did the opening go, and in terms of some of that, the standout observations so far as being on that front end as a car retailer, because it's, are you enjoying it? Is it as you anticipated? Is it getting easier as you get more people around you? How is it going?
Yeah, it is. I mean, I think I did ask my good friend John O'Hanlon for his cheat list as to how he built Wayland's up, but he couldn't find that. So I had to do my own. It is available for sale for anyone that wants to do the same thing.
I'll shout at once.
But the things that have surprised have really been, or caught me out have been, things that seem so obvious when you think about it. But when you're starting with literally a clean sheet of paper, and then, we signed up and our DMS provider said, okay, so where's the sales contract? Didn't think about that, So there's been things like that overlooked, but relatively easily rectified. The cars have been great in terms of reliability and so on, customer acceptance. It clearly was always a question mark about whether we could get a good team built up in the time, and we've been fortunate with that. The team of quite a few of the team have got sort of an sort of premium brand background, which again tells you something about the changing fortunes in the industry. Systems, I perhaps naively thought that we'd be in control of our own systems, but you fairly quickly discover that each manufacturer's got a requirement, and then the finance, the funder has got a requirement, and so on. So your IT complexity sort of ratchets up far faster than you might hope. So, but in general, it's been fine, and the only real obstacle that we've had has just been as a startup, no trading history, Turkish owner. I've done more know your client checks than you can shake a stick at, and we've still got one or two who are dragging their feet on that.
And Steve, just to remind listeners, Auto West London, so it's based on what was a former Tesla site located in Chiswick. And as you say, it's part of Çetas Otomotiv, which is Turkey's biggest dealer group. What feedback are you getting from your owners about their launch into the UK? Because this is their first business in the UK. And what is their appetite for growth here?
Well, there's no point any investor having a single site operation in the market, unless it's sort of like a hobby or an excuse to go visit Jamaica or something. But Çetas are serious. They, as you say, biggest dealer group in Turkey. They're $1.5 billion turnover, so they rank at about top 50. Compared to the European top 50. So it's very sizable. I'm certainly not going to build a business of that size in the UK. Maybe my successor might, but there is an intention to build up a group with scale. We're taking on our second site, hopefully today, if we can get the lease all tied up, which is mainly to provide all makes after sale, to provide after sales for the Omoda and Jaecoo product we sell here, but also extend that into all makes after sales and all makes used for the trade-ins and other cars. But we've also got the opportunity there for another franchise, and we've got a couple of other discussions underway. So I don't know, if you asked my best guess, by the end of the year, maybe we'll be 4 sites or something like that, from a standing start. But it just depends on the opportunities. The investors there, we need to keep our nose clean and deliver, well from this site. As long as we're doing that, then the capability is there to add more.
Yeah, and that sounds like an impressive rollout, Steve. In a short space of time, and Çetas being a multi-franchise group in Turkey. Presumably, they are considering other brands. It's not necessarily new entrant brands. It could be some of the more established legacy brands that they might be thinking of bringing to the UK.
Yeah, absolutely. They have, I think, 16 brands, currently in Turkey, and it's 3 Chinese and the balance are sort of established, European and Japanese. Ford, whatever we want to position Ford in that. Yeah. So there's a number of existing relationships that we can leverage, but it's not necessarily restricted to that. And whilst we have a good relationship with Omoda and Jaecoo and the product's good, as I say, and the interest is there, we're not going to build the group solely on the back of one brand. That doesn't make any sense. I'm sure we will open other Omoda and Jaecoo sites, but we will also form relationships with other brands, either the ones that we have in Turkey or other brands that just make more sense in the UK market. Well, not just a UK market context, but our geographical context of wanting to be in and around sort of West London.
And I mean, just on this sort of first half of today's podcast, I mean, what's your observations so far on consumers' attitude towards the two brands that you represent, the two Chinese brands, and probably as a bit of a follow up to that, have you any trends in terms of who you are achieving conquest sales from at this stage?
I think from an ICDP perspective, I could have told you how many hours people spend on online research and how many sources they look at and so on. I mean, with my dealer hat on, I can absolutely see that. The customers or prospects who come in are extremely well informed. They've done a lot of research on the product, on the company, in some cases on Çetas, and they're coming in to validate a decision, which is what we've always said in ICDP, but it's also what we see here, even with a new brand and a new dealership, that The person I call customer number one, who called me on my mobile in January after a bit of detective work, said he'd been following Jaecoo since, for several months on the internet, and now we were here, he wanted to buy one, so he took delivery earlier this month. So but that's not unusual. I said I was just speaking to a customer immediately before I came on the call, and he's done a lot of research, and he's getting into a lot of detail, and he's finding out stuff about how many spot welds there are, and where the different new entrant brands might have cut corners, and what's the part support like, and so on. So they're extremely well informed, but having done all of that research, they're also extremely comfortable. The ones that come into the dealership at least are very comfortable with the choice. They want to touch the metal, they want to drive the car, and when they come back, most of them go ahead with the purchase. I think in terms of where the customers are coming from, then it may be because of where we are in a relatively wealthy part of the country. But what we're seeing is trade-ins are Mercedes, BMW, Land Rover. I think we've got a Lexus and a Volvo coming. A couple of volume brands as well, but it's primarily the sort of lower end, premium products that the customers are coming from.
And I mean, just on that, and obviously, I mean, you allude there with those conquest part exchanges coming in, and maybe still early days, but how is the used element of the business going? Because through your ICDP and general, the market dynamics, used is a key element of a financial profitability of any retailer. How is that used market evolving for you in these early days?
Well, because we're constrained, here at the Hogarth roundabout site, that we have no display space for used stock.
Okay.
Then we've not gone out actively buying stock yet. We expect that we will do, but only when we open up at Wandsworth. The stock that we have is simply the trade-in stock, and we put it up on Auto Trader and so on. But frankly, we're still working our way forward on that. Both myself and Auto Trader have been giving the team some coaching on improving the photography. We're watching the pricing, obviously. So we're still on a learning curve, and we don't at this point have a dedicated used car salesperson or buyer. Obviously, we will look at that once we get the second site up. So it's too early really to say, but we're hopeful, particularly with the sort of mix that we're seeing at the moment. We're hopeful that we'll be able to build a position, offering, cars are in the, 12 to 18,000, 12 to 20,000 type retail price, because that's not something we can obviously offer from the new stock. We'll have some demonstrators becoming available. It's sort of, low 20s, but it's still work in progress.
We'll be back with more from Steve and his views on some of the big events and trends impacting the car retailing sector after the break.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Steve, last time we spoke on the pod, President Trump, new to the White House, and tariffs were still a campaign slogan. Now they're pretty much a reality, with UK recently agreeing to a 10% charge on the first 100,000 cars shipped to the US. How do you think this move will impact UK car production?
It's clearly it's not going to boost it, but the important thing is that it protects it. The very good reason why Keir Starmer made the announcement at JLR with the Adrian Mardell and the team there in the background that for someone like Jaguar Land Rover, then slapping substantial tariffs on the products, would be a huge disadvantage, bearing in mind the fact that both Mercedes and BMW produce SUVs in the States, so they would not be subject to those tariffs.
Yeah.
So it protects the employment, protects the businesses. I'm sure they've probably got more ambitions for growth, because 100,000 is, broadly speaking, what we sold there last year, I understand. But you'll, in the same way that we saw with the post-pandemic shortages here, if supply is constrained, in this case by tariffs, then they'll rich in the mix and they'll probably end up making the same profit. They might not, we might not see 110, 115,000 if they do end up with tariffs on that marginal volume, but they'll make damn sure that everyone that goes is got a good margin built in for themselves and for the dealers.
Yeah. And of course, for this year, Jaguar is out of the mix, isn't it? Because it's not producing any cars.
It's not. I'm sure the States is an important market for the new Jaguars going forward, but it's a pure EV product. We know what the current sentiment is towards EVs in the States. Trump has also cut back on the subsidies for that. So I'm sure that the Jaguar would have been relatively low volume anyway. And then I just come back to the question of managing the mix. You want to establish the brand. You want to see the right people driving the new Jaguars. If that means you sell a few less, discoveries, then so be it.
Yeah, sure. And just following on from that, with the EU tariff deal yet to be thrashed out and currently standing at 25%, is the UK about to become a more favourable destination for EU exports? And if so, how will that impact the UK motor trade?
I think it will. Those of you with reasonably long memories might remember the period post the financial crisis when the UK recovered faster than the Eurozone. And so there was a huge push from all the European manufacturers, but primarily European ones, to get more volume into the UK. And that led to some great opportunities for consumers and for the dealers. The situation, I think, this time round will be same, but compounded by the fact that the Chinese are taking much more urgent interest in getting into the UK market, partly because of the demonstrated growth here compared to, let's say, Germany, who've been much more reluctant to take any Chinese car, but also because of the tariffs on the BEVs. So we'll see Chinese brands here in the next year or so that we would not otherwise have seen if it was not for the tariff regime.
And slightly on a different subject, and just finally, Steve, I mean, ICDP, you've just published your latest top 300 European franchise dealer groups. I mean, what were some of the big standout trends of this year? And probably as a bit of a follow-up to that, and did agency have much of an impact this year, or do you expect that to be a bit more shown on next year's publication?
I think dealing with the agency one first, it's impossible to split it out because any published accounts will just show a revenue number, and you're dependent then on some commentary that's come from the business, who then say, if it was not for agency, then we would be in position X, like Wayland's have done recently with the impact of Volvo agency on their business. So there's not the transparency. I think that because the top 300 are quite diversified and agency has had only a limited impact so far in terms of both brands and markets, then it's just noise level at the moment. If it became established across, multiple brands, not just Mercedes, but also one or two others at some point in the future, then we have a headache as to how we compare apples with apples. But for now, we're happy that it's a reasonably robust guide to, if not the top 300, then 300 of the largest groups in Europe. In terms of standout trends, then we group we look at the groups in terms of where the headquarters location is. So the UK is slipped back because the headquarters location for some household names in the UK is no longer in the UK. It's in the US. It's in Canada. So the UK slips back to third place with France and Germany ahead in terms of the headquarters location. We've only been doing the top 300 for, well, this is the third edition. The top 50 we've been doing for 12 years. But you can still see, some of the same patterns, that there's a number of traditional dealer groups who are also now acting as importers. You've got a bit more internationalization, and you've got a larger portfolio of brands, but an even larger increase in the number of franchise points. So the commitment per manufacturer, if you like, has gone up at the same time that they've increased the number of manufacturers with whom they partner. So, it's a good story. Stronger businesses, slightly more diverse, therefore, a bit of risk management going on there, a bit of betting on the future with Chinese brands, and but still remaining fully committed to the brands in general.
And within it, I mean, I think you make some notable observations on the number of UK headquartered groups making the rankings compared to other leading countries. What was the data showing on that in this report?
Well, it's the effect of things like sort of Global Auto taking over Lookers, and Lithia taking over Jardine, and then Pendragon. Inchcape, reduces because of the sale of the UK retail business and so on. So it's those big transactions that make the difference. At the same time that the French and the Germans are both moving forward with consolidation. The UK is stabilized to some extent, and so when you look at the lower rankings, then some AM100 type groups are dropping out because they're now maybe a few tens of millions smaller than a French group that's been continuing to grow. And then also exchange rate variances make a difference. So it's a modest change, but if you're flying a UK flag, then you don't want to be in bronze position, do you? You want to be back in the gold position.
No, agree. And I mean, just conscious of time, and more important, I mean, this is an extensive piece of research. As you say there, you'd move from the top 50 down, now doing the top 300. For those listening to the podcast today, where, I presume it is available to purchase now, and what is the best way of getting hold of a copy of the report?
It is available. It's on our website, ICDP.net, or you can email us at projectoffice@icdp.net, or you could just Google it and you will find it. There's not there isn't anyone else competing to offer you a European top 300. So
yes, you're the only one. Yeah,
I'd be disappointed if it didn't come up. But I think if you're it's over a third of the franchise points. It's over a third of the total European market in terms of sales volume. So anyone who's looking to build a network, who's looking to sell a product or a service, if you're not with these 300 groups, then you're playing on the edges, really.
Yes, yeah, no, fantastic. Well, pleasure having you on. I'm glad it's going so well. I know it was just before you opening when we last caught up, and I think we had the pleasure of King Charles going past on the last one that we caught up. Nothing coming today, but I'm glad it's going well. Fantastic, and look to and hopefully you get that second site goes through as planned, and then you can start to expand one in terms of your franchise representation and your after sales and your used cars. But I think the fact that you already we're talking at the end of May, you opened up in March, then and you're still balancing the ICDP demand as well. So congratulations in such a swift and great
if
start.
Work's fun is not work, is it?
So, who do you sell that to every day?
Well, my wife is very tolerant, fortunately. our new puppy is less tolerant.
Okay. Yeah. So all the home developments all on hold for the minute while she get all this sorted out.
Yeah. I think we'll. I need time to breathe.
Yes. No, brilliant. Thank you for coming on. Appreciate it as always.
That's a pleasure. Thank you very much, both of you.
Thank you very much, Steve. That's all for now. Many thanks for listening to this special weekday Motor Trade Radio podcast powered by Motors. We're back with the headlines next weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.
Thank you.